Yo. Hello guys, welcome to Mali Traders. I just wanted to touch briefly on some of the trades that we'll be taking this week. This week has been kind of weird for indices. However, there were some trades like FTSE 100, which is the UK index, which were like absolute stunner. This just made our week, along with some other trades like gold and EU, for example. All right. Okay, so I'll just touch a little bit on the environment where we are, where we find ourselves, and the bias. Okay, from the weekly time frame, you could say that okay, this entire market is sideways, right? It's sort of ranging. So why other indexes, for example, YM and ES came all this way, it's sort of like the direction is a little bit more obvious. It's more like bullish, and then retrace a little bit down into discount zone from here. If you take it from here, now if you take it from here and you make sure you know, okay, of course you are in deep discount, right? Traded from premium to discount, tag this sell side zone, take out the sell side liquidity, and went back up, right? So for the FTSE, it was a little bit different. It didn't take any significant sell side, right? So this was still intact. However, it still dove down, fill this gap, and retrace from there. That was the weekly. And then if you measure from here to here, we're sort of like in a sideways range. Okay, so that is pretty much straightforward. And then if you go to the daily, and by the way, in this setting, there is no fair value gap. There is no draw per se in the form of fair value gap or any other gap. However, we have the sell side, which we're using as a draw to say, okay, if the American indexes dump lower, this might go a little bit slower, right? And at the same time, we're keeping our eye on this fair value gap, which is this weekly fair value gap. So this is what is left from this. So this was our sell side draw on liquidity as we were watching it. So however, when we saw that the price was hanging around here, so we thought, okay, it's going to go up. And then if you go to the daily time frame, it consolidated here and it dove a little bit lower, taking sell side, this swing low, and then tap into this other block right down here. And then we went up, we had this breakout structure or market structure shift. So we know, okay, this trend has sort of shifted bullishly, at least for the time being. And then it left this gap here. I have to point out though that the foreign indexes usually they are more prone to leave gaps than the American, NQ or ES, for example, right? Hold on, let me just clear this so you have a clean and clear chart. All right. Okay, so that doesn't really, not that makes much difference, but let's go back to the chart. So here we went up and I was looking for a retracement inside this zone. Okay, so we were waiting. If you go to the 8 hours, we don't really use 8 hours that much. We use the weekly, daily, 4 hour, 1 hour, 15 minutes, 5 minutes, and maybe one minute time frames. So those are our time frames that we work with, right? So we saw this price went up, tap into this area right here. So if I take this and then we can see, okay, where we came to. We didn't really take it out. So this high is still intact. It's relative equal highs. So I believe I have some, this is my technical analysis here. All right, so there's an alert there to inform me that, okay, price is getting close to this. Actually, I should put, I'm going to rechart this later just to update it. Okay, so we know that it's relative equal highs here. I think it's on the daily time frame. Yeah, on the daily time frame. So there's buy side resting there, and we got to touch this gap zone. Okay, so we waited, and then we saw this sort of consolidation towards the downside, and there was no clear direction, so there was nothing to do. 4 hour wasn't clear, 1 hour wasn't clear, and then absolutely 15 minutes wasn't clear, just like all the other indexes. However, if you zoom, just if you get stuck on just one time frame, you become blinded. You won't know what is happening in the other time frame. So you have to do time frame alignment and see what is happening on the daily or the 4 hour to see if it aligns with what you're looking at on the 15 minutes or the 5 minute time frame. So today we had a little bit of a setup formation, or rather our analysis playing out. So we saw this coming, and let me just open this so you have an idea of what we're working with. So this is what we do, right? I'm just going to go back and tell you why we do what we do. So when we see a gap like this, we mark it out, daily volume imbalance, just like we mark it out here, daily volume imbalance. And then we have a daily inside our daily volume imbalance, all right? So that is a higher time frame point of interest, all right? Okay, so let me close it. If we have the money levels, again, we have that, which is a consequent encroachment of this week inside the same place. So right now we have 3 higher time frame point of interest aligning in one single point of interest, so to speak, which is this zone, in one area, okay? So which is inside this gap. So right now, if I open the 3 of them, or rather the 2, so we can see this is what we have here. So we have the consequent encroachment of this old daily wick, that is what it means. 1, 2, 3. So this is 3 higher time frame PDAs in one area. So this becomes a high frequency, or rather not a high frequency, but a highly area of interest to us. And so we were keeping an eye on this place, and then on the 4-hour time frame, as we were watching liquidity building above it, so we knew if price taps into it, we already have a market structure shift, so this is kind of bullish. So we're looking for a long, we're looking for a buy, right? We're looking for a buy. So we know if price tap into it, we're gonna go up. So we were just waiting for this to happen, and then today was the realization of that. So the entire week, so to speak, sort of, we'll be waiting for this. So we saw this liquidity up here. You know, I'm just gonna draw this out so you know the area we were working with. Then I'm gonna close it so I have less clutter on my chart, right? Okay, good. Hold on a second. I'm gonna close it. So all right, so this is the area we were waiting. So we saw this liquidity building on top here. Most people would like to trade this. They want to trade everything they see on the chart. However, that is not a good habit. You have this fair value gap, which was tapped into. It was a good point to trade from. Yes, it is. And then you have breakers and everything probably aligning over there. Yes, it is. I agree. However, we wanted this sell side tapped and tagged and then go down. Oh, by the way, if you pop this open, which you have a gap here, right? NDOG, NWOG. I have a video. You can go back to some of our old YouTube content. You will see, you will know what this is, or go to ICT's channel and you just try to figure out what NDOG and NWOG is. We have it here. Price was consolidating above it and below it. So price was just stuck within this range. So we wanted price to leave that range, tap into this liquidity zone here, this gap, and then we're gonna look for long. So this happened today. So on the 15 minutes time frame, we could see it clearly, right? So we saw this a whipsawing sort of event, and this happened during Asian session. So Asian session, this is when this happened, and then when the London session opened, it went up. Another confluence, another thing we were watching also to see our institutional zones playing. It was inside. So we had our institutional zones inside the gap. So this was also reinforcing this zone that, okay, price is most likely rather going to react or reject from this zone. Okay, so we have a lot of things lining up in this area. And then going back to 5 minutes time frame, you can see it clearly. Sell side taken, and then we had a market structure shift here. So when this happened, if you go to the 1 minute time frame, which is a little bit too much, You see a market, you see a sell side taken here, and then you see a market structure shift, and then here you got your OT, you could say, yeah, thereabout, just at the tick. So you could have entered here if you like, right? And if you go to the 5 minutes time frame, where is it? This is it. But however, you didn't need that. You didn't need the OT measurement or anything. You could have just entered on this fair value gap, which in other words is balanced price range, BPRO, because it has a CB and a BC on the opposite of each other. So you could have entered here. This would have been your trade, and you would have netted yourself how many pips? Let's see. I don't think this is measured in pips, like indices are measured in pips. However, that is what it is. I somebody gained 1%. So, which is a lot, right? But it's not over yet. There is something else you guys need to understand, something called quarterly theory, which I just started implementing not that long ago. Credit to Trader Day on Twitter, go check him out, Trader Day. He sort of, ICT spoke about this. ICT spoke about this in his lectures, 2022 model, but I didn't. I sort of ignored it. He spoke about quarterly theory and seasonal tendency, a lot of stuff, as you guys know, right? He talks about a lot of stuff, things that you want to know and things you don't want to know. Whatever, it is what it is. Point is, I sort of just push this aside. However, recently I started implementing it on my trading, QT and ST, seasonal tendency, and quarterly theory. So shout out to Trader Day, and by the way, also shout out to Sniper, who sort of be using this a lot. I watched some of his video, so I have to give credit to whom credit is due. So how this works is that this is not a lecture about quarterly theory anyway, but point is, no, sorry guys, no, take this out. This is not a lecture about quarterly theory, but I'm going to show you how I use this. So this was, hold on a second, I have to, so you don't get confused here. Just going to Q1 right here. So why this was happening, we got ourselves the accumulation, manipulation, I think let me use, where is this quarterly theory indicator here. Okay, I don't know what I did wrong. My trading view seems to have just malfunctioned. Okay, it doesn't matter, I'm just going to use this anyway. So within Q1, you will usually have your accumulation, and then Q2 you have your manipulation, and Q3 you will have your distribution, right? So if you plot this quarterly theory, if you plot any of these indicators on your chart, and then you could use it to just know where your accumulation, your manipulation is taking place, and then you could use that, you can add that to your analysis. So in my point, or rather according to this theory, the Q1, which is represented by this this line here, we had the accumulation, right? And then we had the manipulation within Q2, manipulated into my sell side zone. So I knew this move was the first move, which was a Judah swing. So this just guarantees, so to speak, if you like, kind of reinforces the fact that, okay, and I'm looking for a bullish move, right? So when the manipulation happened and it got manipulated into my expected zone, anything from there, or rather anything after there, I will be using it as some form of expansion, which is exactly what happened here. I'm sorry guys that the indicator I was supposed to plot didn't really play out, so I'm just gonna put it again. Let me see if it's so somehow TradingView, as you can see, TradingView, I don't know what I did wrong. TradingView is just acting weird, but I'm gonna make another video about this later on. And my own indicator is in play right now, rather it's we're working on it. So as you can see, this just went up here, so this is a little bit of a fail. Yeah, okay, this is what I was looking for. Somehow it flew up there, but okay, now it's back. So I'm gonna remove this, and I'm gonna leave that one up there, and I'm going to try to make this put historical, right? Okay, so this was accumulation manipulation, so it was manipulating here, right? Although the manipulation actually took place in the Q3, however, this was my expectation. I can wait. I know that, okay, this is not picture perfect, so to speak, everything happening with inside of Q2. And you can see, you could have, if actually taken some, traded this up as a manipulation and then distribution, and then use this again and then to go this way, okay? But it did play out, and I will make a video again, or rather I will apply this principle to my future videos, so I can talk more about this indicator, and I can talk more about the whole quarterly theory thing. It's kind of the new buzzwords right now going around. But yeah, I used this before. I mean, I've used this principle before, but I just didn't apply. I didn't grasp it as much as I do now. It's kind of recent if you know how to apply it, but you need to use it along with your bias, and you need to use it along with other things. Okay, so that is for that. And then for gold, something has happened also. I'm going to jump over to gold. Let me just move this, take it down, right? I'm going to jump over to gold because it's also something else that happened. Exactly, this is what I'm talking about. So if you look at this place, this is our daily, and what else do we have there? I have to go to a higher time frame just for it to be clearer. So we have a weekly, I think, a weekly fair value gap, right? We have the leftover of a weekly fair value gap. So if you go to the weekly time frame, you can see that we'll be filling this fair value gap, and as we fill it, I keep reducing it, right? I keep reducing my box just to fit in, so I know what is left. So today I was waiting for this sell side to be tagged, or rather this daily low to be tagged. Everything else has been nuked so far, right? So yesterday we had this, and initially I thought, okay, this is going to reject from here, but then it just made it like, okay, relative equal lows, which made it even stronger. So today we traded into it, we consolidated around it for a while, right? We consolidated around it for a while, and then we left. So why we already traded into it, so this consolidation, this low doesn't need to be taken out for this to happen, okay? So if you look at 5 minutes time frame, which becomes a lot clearer, you can see the consolidation, or rather accumulation. So this is just engineering liquidity, and you can see clearly here that we have like relative equal highs, and these highs are not taken out. So at least before anything could happen, these highs must be tagged, so to speak, eventually. So this would be a low-hanging fruit. So if you had entered here, so this would have been where you would have taken profit, at least initial profit, and then you can jump your stop loss up, right? So we saw this happening, and we saw this above. So price was just rejecting from here. It didn't come up here yet. So this gap isn't tagged yet, and you have relative equal highs. So this is a drawn liquidity on its own, as long as price is consolidating just above, hovering above your higher time frame point of interest, which is right here, right? So you know that is going to be tagged eventually. So you just wait. As soon as this happens, you just be adding up, or rather entering your position here. So you could use whatever entry models that you have and enter. So if you wanted to be safer, you could have waited and maybe enter here. But then you might be unsure to say, okay, gold is kind of bearish. Maybe we've already tagged this buy side and this is going to continue going down. So entering here, you might be afraid. Maybe you enter here, you might think that, okay, we're going to continue going down, and in that case, it was a bad trade. I would understand that. However, this is a higher time frame point of interest, and we've traded down a lot. So it would make sense that gold will retrace a little bit higher, a little bit more before it can eventually continue its bearish move, if that is to play out, right? So what you would have done, this was the manipulative leg. This was, what is it? Manipulation up. Okay, so you take your standard, no. So we have a projection, as you can see, between the -2 and -2.5, you have a consolidation zone here, right? You have a high here, which is going to be tagged eventually. So you could have used this to measure your projection, and you have the -4, which eventually played out. So this is exactly what we did today, and the process I just walked you through is how we applied, or rather how we thought about gold, and we were able to enter here. We didn't enter here though, we did enter here, and we didn't need a market structure shift or any of that, because we applied other strategy in getting in. But let's go to the 2 minutes time frame and to see what we can see. All right, and by the way, we use that standard deviation measurement for our targets. So here we saw this happening, sell side taking at exactly 8:30 open. So this is what we mean. And if we look at this again, I'm just going to take this up. I hope it doesn't jump to the roof this time. All right, cool. If we apply this days theory here again, we will see that, go back to the 5 minutes time frame, during this period, which is so this was the accumulation zone period, manipulation. So this entire thing was the manipulation, right? So we know this move, it was inside our manipulation period. We know everything here was just being manipulated, all right? And then when it got to the green part, we had our catapults, right? So everything just sort of played out. So inside here to here was the manipulation zone, and then we left. So when you apply quarterly theory together with your bias, your daily bias, and your higher time frame point of interest, you have yourself a killer strategy. If you have, which you can also add to your whatever strategy you're using. So you just use it as a more confluence or some other to boost your confidence in your trade. Okay, I mean, I could go on with a lot of other trades, but I didn't want to make this video long, or rather longer than it already is. I hope you enjoy this, and if you want to know exactly how we do it, when we do it, or why we do it, you can join our Discord. The link is in the description below, and then we can teach you exactly how we apply these things, or we can mentor you how to use it. Okay, share, like this video. I'm still trying to get used to how they say these things on YouTube, but yeah. All right, I will see you guys around, and I don't know when I'll be making video again. I'm currently busy with other things, but these and a lot of other ones, that strategy that we use on Mali traders. So we have our own Mali strategy, but just applying this other concept just amplifies and give us a lot of confidence in our trading. It sort of changes things, right? So, all right, guys. Till I talk to you again, please like, share and subscribe. Yeah, I got that right. Bye guys.